Welcome back. I'm Eric Sapanic. This is Brian Keneally, and this is the Gold Spot. Well, we're having a heck of a market, aren't we?
We are.
Absolutely.
For sure.
So today is actually Wednesday when we're shooting this, and we're going to air this on Friday. The reason why I tell you that is things have been just so crazy from day to day that by the time this reaches you, we don't even know where the price is going to be. Today, prices actually retracted a little bit, came off of the inflationary numbers that the Fed reviewed, and then we are now we're contemplating the idea of pulling back rates or not pulling back rates, how that's going to affect the overall economy if they decide to do such. So there's a lot going on there. But with the price of gold, where'd we get to? We got almost to
2,400, which Bank of America really said that would be the high for the year. So they've always been a little bit short on that.
Right, and then we said publicly that 2,500 was the experts' combination, the average number between that came out at 2,500. Well, we're just about $100 away from that actual high, and it's only April. So I'm very confident that not only is that high going to be met, but most likely exceeded this year. Crazy idea here is the fact that today's pullback is based off the U.S. markets, but that is not the marketplace that is pulling or that is driving gold prices. The marketplace is going to be China because there's three countries right now that lead the way on gold buying, which are
China, Poland, and Singapore.
Right. And with that being said, here's some of the numbers. The U.S. leads the world's official bullion holdings with 69.7% of reserves, which is 8,133 tons as of last month. Now, in 2023, China outpaced all central banks, adding 225 tons of gold to its reserves. That was the highest increase since 1977, with total gold reserves reaching 2,235 tons by the end of December of last year. Now, as of February 2024, gold accounts reached 4.3% of China's official foreign exchange reserves from 2.9% in 2019. Now, we had that chart that we put up there for you so that you could kind of see what's going on in that time frame. But this stems a question. Do you think one of the reasons why China is buying gold might be because of the sanctions that we put on Russia during the Ukraine conflict? Maybe the weaponization of our dollar is spooking them a little bit, especially with everything, all the saber rattling when it comes to Taiwan. What's your take on that, Brian?
Well, I think that there's a few factors. One, we've got the conflicts in the Middle East.
Absolutely.
We've got central bank buying on its highs, and we've got the futures markets here in the States that are driving the price higher also.
Are we surprised, I guess is the question. Are we surprised that gold's at 2,400?
Well, look out, right? Because we've broken those resistance levels, so now it's anybody's guess where it can go from here.
So therefore, I think gold prices right now, from what we've been watching, not to say that there's any genius in the room predicting this, it's really much like Jerome Powell said, the deficit right now in this country is a long-term problem. We know that. Nobody's really contesting that at this point in time. So I guess the question is this: where do you think gold prices could ever dip below 2,000 ever again, or do you think that's a thing of the past?
I don't see any argument for that at all. I think the arguments are really made for a much higher gold price going forward.
I think so too. I mean, obviously, we're going to see retractions along the way. I remember when we left $1,000 in the dust, and we had passed it, pulled back from it, passed it, pulled back, and then eventually it just went.
Yeah.
And it'll never be $1,000 ever again. I think it's fair to say that because the dollar isn't worth that. Think about what $2,000 is worth today, or $2,400. Most people can't get a month's worth of rent out of that type of number.
That's right.
So with that being said, I think another thing that we want to consider here is what's going to happen with the BRICS. And the BRICS is, what's the BRICS? Tell our viewers.
It's Brazil, Russia, India, China, and South Africa, as well as they've added many other countries onto that now.
Right, and it just keeps expanding.
Yes.
And the concern is the almighty dollar.
Yeah, to replace the US dollar as the reserve currency. They're going to back their currency with gold, and that's going to give more confidence to other countries in their international trading.
So I think that as we go forward, we need to consider more about the long-term hold. Yes, right now is a very exciting time, but where is it going to be in 5 years? Where is it going to be in 10 years? Where are we going to be in 5 years? Where are we going to be in 10 years? So with that being said, I think that you should all consider that when you're looking at buying your gold. Do not short-term this product. It is a long-term hold. That's what it does the best. And as far as silver's looking pretty good as well.
Yeah, silver's on a bit of a tear. It's higher than it's been in what, 3-4 years now, right? We've seen a little break in that action, maybe a little less pressure from the futures. It's been a great market for the moment. Let's hope it continues.
Right, and I agree with that. So with that being said, I want everybody to tune in after this for the gold spot overtime. We have a really special announcement and also a special offer. So we'll talk about that. I'll be with Michelle next, and thank you for watching the Gold Spot. We'll see you next week. If you enjoyed today's Gold Spot, like or subscribe to both our YouTube or our Rumble channels. Also, comment below if you have any questions or if you want to hear us talk about something specific in a future video.